Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome back to the channel. Once again, for those of you who are new, this is where we talk about all things market profile, but we don't just cover that, we also look at stuff related to candlesticks as well, right? We know you guys love candlesticks, we know you guys love Forex, and that's okay. So a lot of the examples that I do here and the stuff I show you is going to cover that too. But for the most part, we cover everything if it concerns trading. But everybody knows on this channel that I'm huge on market profile. It's used across institutions, and I don't see any reason why as a retail investor you shouldn't be using it too. For those of you who don't know me, I need no introduction. Just look at some of my videos here on the channel. You learn a lot about me, what I do. I have a free Discord server that you can access and you can communicate with me directly. I've been in this business for 15 years plus on both the institutional side and as a retail investor, so I'm just like you guys. I've experienced it from both ends, and I've dedicated a lot of my time to letting you guys know how this business really works from a no BS point of view. You guys, like I said, I say this all the time, that you guys know what's out there. It's a load of crap. There's so many influencers just leading people in all kinds of directions because they're getting paid to do it. They're being rewarded by the YouTube algorithm. This is a really small channel. You guys can actually see I barely get any views, but the people who come here and they stick around and they watch the videos, they get an immense amount of value.
Big bank, small bank, I like to make money. All right?
And I get it all the time. People DM me in the Discord server all the time saying, amazing, thank you so much. You really helped me. I was watching all these people and I'm not really getting anywhere because they're not going to give you what I give you for free. These guys are in it solely for the money.
Cheddar! Ah! Cheddar Wizard! It's pretty scrumptious.
Most of them probably never even traded. The ones who have probably not traded anything outside of a Robinhood app. Most of them don't know about any of the things that I teach you here. They don't know about market profile. They don't know about TPO charts. They have no idea the impact on volume on trades. They don't know anything about session times. If they're Forex traders, you know, what you tend to see is just regurgitated stuff, right? So over here, I try and tell you what it really is, right? Not the marketed version, like the real raw version. And that's kind of what you get in this channel. But anyway, today I wanted to talk a lot about strategy, right? Now, often people, when you come into trading, there are like tons of strategies. Everyone's showing you a strategy. There's a strategy there. There's a strategy there. So, you know, do it this way. And what you get is you get confused. What strategy am I actually supposed to use? You know, there's strategy A, there's strategy B, and everyone's saying that they're profitable using this strategy or they're profitable using that strategy.
Where am I? What year is it? Is The Rock president?
Well, what I always say to traders, there's only one way to trade the market. Now, when you think about it at the core, as a trader, what are you doing? You are buying something really cheap and trying to sell it for expensive, or you're borrowing something, selling it for expensive, and then trying to buy it back when the price declines for really cheap, right? Which is what we call shorting. Or you're buying something really cheap, selling it, closing out your position, right? So liquidating it. So in other words, you're selling to exit, right? You're not going to be back in the market. It's kind of like open interest has been removed, right? So you don't have an active position. you don't have an active order, essentially you're no longer part of the game anymore. And that's what happens when you trade, right? You're not doing anything else. That's pretty much it. The whole business is about orders, right? So wherever there are orders, right, that's where the market is going to go, and that's what we call liquidity. That's it. There's nothing else to it. So if you know this inherently as a trader, that that's what you're doing, you're trying to buy something cheap, then sell it expensive, then your whole strategy, your whole mindset should be focused on being able to do that. So there's only one way to trade, right? And I'm sure now this is probably starting to click for you. There's only one way to trade. So if you're using a tool or something that is not helping you achieve this optimally, you need to change. There's nothing you can do about it. You need to change. But what you can't do is go on a never-ending journey to find the Holy Grail.
Look, you stupid bastard, you've got no arms left.
Yes, I have. Look! It's just a flesh wound.
The thing that is gonna get you to turn $1,000 into 20 million, and so you can buy your beach home in the Bahamas. This is not gonna happen. Sorry guys, don't mean to be the bearer of bad news. I run a podcast and I've spoken to so many really good traders. One of them was even a market wizard, and if you come to my Discord server, you know, you can see that. You can see my podcast. You can see the people I've spoken to. So that's fine. However, I've spoken to all these highly successful people with proven track records. I'm not talking about the guys who sit on these prop firm podcasts, you know, telling you about how they made. This is BS, guys. No offense to these guys. It's BS, right? Because I know people in the back end of this stuff, and what's coming out of there is not good news. So people are trying to go there, point in case, what's coming out of that industry right now is not good news. And you guys know what I'm talking about, because there have already been some really high profile scandals, right? It is what it is. Social media, it's a toxic space.
I mean, I just kind of felt like that social media and Twitter's what's destroying this country anyway. So that's how I feel about it, from politics to sports to whatever. It gives people a platform to, and then other people are like needling it, and they're sitting at home and they're late on a payment. So anyway, that's how I feel.
And in that space, you're going to get a lot of deception. This is what I try not to do here at this channel. I'm not an influencer, right? I'm a trader. I'm an excellent trader. You can see that based on the content I put out. I don't need to influence you. I don't need to get you doing a thing you don't want to do. Everything you see here, you know, take it with a pinch of salt. Follow it. If you follow it, you might get something out of it. If you don't follow it, I don't care. No, I don't lose any sleep from this stuff. So I'm not going to worry about it. However, those guys, their job is to influence you so that you can pay them a ton of money, right? So that they can go buy their beach home in the Bahamas. Whilst you just keep getting poorer as a trader, right? You need to break that cycle. And that's hopefully what we're going to do here.
I declare bankruptcy!
But anyway, on to what we're going to talk about today, best trading strategy. And when I say best, right, I'm going to tell you everything. I'm going to give you everything here now, right? So pay attention. Stick around, guys. Not kidding. Right, so first and foremost, the first thing you want to be able to do is you want to develop a bullish bias, right? So I say bullish bias. You want to develop a long-term bias. Pardon my French. You want to develop a long-term bias. By that, what I mean is you want to decide if long-term the market's going down or it's going up. Largely, these days, it's really easy to determine the market is largely the dollar. If the central bank prints a ton of money, then asset prices are going to explode, and that's all assets that are not US dollars are going to go to the moon. Whether it's crypto, whether it's European currencies, whether it's stocks in Europe, stocks in the US, it's bloody stocks in Vietnam. They're all going to the moon, right? There are some markets that are non-correlated, but unless you like investing in forestry, I'm probably pretty sure that everything's going to go the same way, because all these assets are denominated in United States dollars, in most cases anyway. And even the assets that are not denominated in US dollars, the countries or the central banks of those countries have to hold US dollars in a reserve, for times of crisis. So either way, there's going to be an impact via FX reserves alone. So the market is the dollar, as I always say. So again, developing a long-term bias is not very hard, just because the market is the dollar. So if the dollar is going down, then everything else is going up. And if the dollar is going up, everything else is going down. It's not rocket science. So develop a bias. Now, the easiest way to do that, if you want to kind of develop a more technical bias, which is kind of what a lot of people want to hear, is that, what's the technical level, right? And that's okay. So we pop open a weekly chart. I'm using a candlestick for this example. For guys who, see my profile stuff, and if I click that on here, you're pretty much seeing the same thing. Depending on the time frame, this is a daily profile. So again, if I converted it to a weekly profile, you'll pretty much be able to see what I'm showing you on a candlestick chart. But for simplicity, and I know you guys love Forex and you love your candlesticks, and I'm not asking anybody to change that. I just think using the TPO chart is way better with what you can see. If you don't believe me, check out some of my videos. We made some amazing calls here, and really actionable stuff, and you can actually see that on those videos. But in any case, let's talk about candlestick. So you can see here we traded up, started to sell off, right? So I'm going to start the loop here. So we went short, we traded below short-term liquidity relative to this time frame, and then we recovered, and then we started long, right? We also had a trade below short-term liquidity here, and then a bounce up, right? So what's happening here is that we've always said this, right? To reiterate this point, at highs and lows, there's going to be abundance of stops. So at the highs, there's going to be an abundance of people who are going short and having their buy stops up here, and at the lows, there's going to be an abundance of people who are going long and have their sell stops here. So we have pretty much an abundance of sellers at the bottom and an abundance of buyers at the top, and that's why everyone tends to buy the tops and pretty much sell the bottoms and lose money. It's because that's where the orders are packed, right? It's lots of liquidity. So the practice of the market is generally to go down, take out the liquidity, move higher, or go up, take out the liquidity and move lower. Every now and again, you could get squeezed at these tops, but it happens less often than you think. So we started to sell off, we traded liquidity low, recovered, and that gives us a bullish bias. Now, we technically already know that fundamentally, the US dollar is probably going to enter into the devaluation phase. Now, it has an incredible amount of value locked into it, right? So we see over the past, since the Federal Reserve started to hike interest rates, a lot more money flowed into cash. A lot of it was orchestrated by the Federal Reserve itself, and that's through reserve repo facility, but we're not going to get into that now. So through that facility, they were able to suck out a lot of liquidity from the system, and that was obviously cash stashed away. Now, all of that has been put back into the system. So what does that mean? It means that the US dollar is likely going to tank as people sell off the dollars to buy assets. This is the story of all global inequality or European inequality, whatever you want to call it. If your life's hard today, it's because asset prices are continually inflating. And this is not something that gets recorded in the CPI. So your CPI doesn't record asset prices like housing. It doesn't record asset prices like stocks. So it limits inflation to mainly food items and other kind of items that don't necessarily reflect the real pace of inflation.
What an odd thing to say.
Those assets, the central bank looks at a 2% target, and we're talking about things like food inflation and, those other things that, to be honest, most people don't even care about. But where the real inflation is in assets. And that happens because money gets put into the system, so it gets printed, gets handed over to, for lack of a better description, gets handed over to the extremely wealthy. We're talking about the ultra rich. And they buy assets, right? That pushes asset prices up across the board. And most of the assets they buy, contrary to popular belief, is stocks. They don't buy, they buy housing, yeah. But most of the ultra wealthy buy stocks, or they buy index. They buy an index, right? So they buy some kind of structured product like an ETF of some kind. And that's where they lock their money. Because just think about it. if you had 20 million, for example, and someone asked you, well, what you going to do now? Well, your simple answer should be, well, I'm going to put it in an index fund, right? Because it doesn't matter, that index fund pays you 6% a year. Well, ka-ching. If it pays you 10% a year, well, you're looking at about 2 mil annually. I mean, gee, you don't have to work hard for your money, right, anymore, because your money is working for you. And that is the whole premise of why government keeps printing money, or central banks keep printing money, so it can give it to the rich, it can buy more assets, those assets can go up in value. And the idea is that, well, if these people make a ton of money, they're just going to reinvest it back in a business. But the reality of it is, even though in some cases they do this, but for the vast majority of times, they just put it back into assets like stocks. Again, so yes, they're investing into companies, they're allowing them access to this pool of money so they can make more products, so consumers can pay for those products ever exorbitant prices, whilst the wealthy can see their wealth rise exponentially by staying in stocks. So if we know, all right, that this is the general cycle, this is how things work, then we also know that no matter how expensive the dollar gets, i.e. via interest rates, at some point the central bank is going to have to cut those rates. So usually when those rates are rising, we get a bear market, and when they're cutting those rates, we're getting a bull market. But it starts earlier than you think, because people want to front run the information. They don't want to wait for the interest rate cut. They already know it's going to come, so they act ahead of time. And that's what we've been seeing. If we go all the way back to 2022, when the market bottomed out, we can see on the longer term, extreme volume, so high float. We often talk about this. And then this was a long-term liquidity low. We can see that here. So we traded below the COVID low, took out all the long-term liquidity, popped back up at 114.45. You answer me why you were not buying cable.
Why?
I'm not gonna and this is why we focus on things like liquidity, because you can see that liquidity was taken out. We had a recovery back into that long-term liquidity range, which takes us all the way to 142. But while waiting, we buying cable, right? So we had that very strong rally, and then we consolidated, which is what's happening now, and we've formed a short-term liquidity high and a short-term liquidity low. So we do expect that at some point we're going to trade slightly above the liquidity high, or maybe even break it and go all the way to 142 and trade that liquidity high instead. But we'll at least expect a reaction at the top here. So the opportunity to be long really came when we cleared the liquidity under 123.09, and then we recovered that at 123.82, right? Step number one, right? So we have a long-term bias, right? That we're going to go higher, more than likely, at least to 132. So at the very least, this is our expectation if monetary policy changes. Now, if we look at that more long-term, we stretch it out a bit and think about how much devaluation is yet to come in the US dollar, then that gives us a good global macro that the likelihood we can retrade 143 becomes incredibly high, right? So our long-term bias is bullish to 143, bullish to midterm 132, right? So we have a long-term bias, so we're bullish. So we want to look more at trades that are going to be on the buy side when we come to the smaller time frames. So now we've established that bias, so that was step number one. We can flow a little lower. We don't have to go into the daily 4-hour, load of BS. We don't have to do that, right? We can go straight to the intraday, right? This is a Forex pair, so it's, volatility in Forex is really low relative to stocks. So let's open the same pair on cable and let's look how it's progressing through the day. So you can see here, right, there are a few points. So the next step is we want to identify within the intraday where a lot of the action is going to happen. People are going to come and take positions day to day. So even if the market's going to go, 500 pips, it has to start somewhere. So that means that most big traders are going to come in the intraday to position. Everyone has to buy today. Even if the market's going to go, you're going to have to, if you're getting into market, you're going to have to pay now. So it doesn't matter. You paid this minute, you paid 5 minutes, it doesn't matter. It happens at the nanosecond. So we want to figure out where the demand is. The intraday is a great picture for me. I never look at anything under the 1 hour time frame. I mean, why would you do that? Guys, why would you do that? 1 hour is the best. That is the best time frame. It's a reasonable time frame where you can actually see what really took place in the intraday. right? And it mirrors those major sessions, right? So the next step would be figure out the demand. Where is the demand? And we do that by assessing the volume. So in this case, we can clearly see on the 15th of February, major open, New York Open, we established a lot of demand there, and we've mapped that out, right? So we map out the demand. Going forward in time, we can see New York Open, 16th of February, there was additional demand there, right? Second highest volume over those 2 days, right? We can see where the supply is, 126.83, highest volume so far. So sellers were very dominant at this price. They were uncomfortable. Now we are here. Is the market trading a discount or a premium? So we know where the demand is, but is this a good price to buy? Discount or premium? Most traders come in and they want to pay any price because they think the market's going up. They forget that price is an advertising mechanism, right? It is not of any relevance. It's an advertising mechanism. How the hell do you know if 126 is cheap or 127 is expensive within such a short window? You don't know. There's no way of knowing. I mean, unless you have access to, unless you're a bank, then yeah, you're gonna know.
Do you want to know what it is?
But the truth is, we don't know. Not in the short term, and no one can tell, right? So we don't want to waste time trying to work that out. We just want to figure out is how long has this market been going for? Is it at a discount or is it at a premium? And for me, if I look at where it started, I can see the demand is here. That's where most interesting part is. So now it's trading at a slight premium. Do I want to be long here? Hell no. I definitely don't, because it's too high. And by the way, yeah, it's going up. Price is advertising itself. It's telling me it's going up, so you should buy. But one, if I buy now, I'm paying a premium for one. And secondly, and that's the next point we're going to come to, I'm trading in a session that's not really major, right? It's not a major session. The US Open is going to be that major session, but we'll come to that. So the next step is, if I'm paying a premium, I don't want to do anything. So you can actually say this market has traded a liquidity high and it's paused and it's not able to come back and settle back into the range. So that tells me that, yeah, we might get some up push. But I can also see that we've done a lot of liquidity sweeping up here. So we've come out, taken the stops, come down, taking more stops, come down, and it looks like we're going to do that again. Right? But this now is a better premium. Why is it a premium? Because I can see that the sellers really manifested at that level, right? And they pushed the market lower, and they caused minus development, right? And that's evident if we pop on our profile chart. Just split that rotation there, we can see the same thing, but with a little bit more information. So we can see, okay, minus development here. We can see there's a value high here. So we know that, well, at the very least, we're probably going to go to value high based on where we're trading now, right? And that's okay, because we don't have to be long. Why we have to wait to see if we're going to take out those premium levels, right? So that's if we're using a profile chart. But no, we're using a candlestick chart. We can't see that. We can't see where the value high is. So we don't know there's a technical resistance level there. And it goes back to what I said in previous videos, is you need the right tools to do this business. It is not okay for you to just sit down playing with, candlesticks, right? It raises the anxiety level. You don't need that. So again, you can see we're struggling, right? So I'm not going to buy this. Impossible. I'm not going to sell it either because it's outside of a major session. I need to wait. That's the point. I need to wait till I get a major session that gives me confidence that we're going to go short, right? But let's say you've already gone short, like you've been hasty, right? You waited all night, some people do, and then you sold the market. Well, at this stage, you have the advantage because you're selling at a premium, so just put your stops above the liquidity high and wait. Right? It goes down, it goes down. If you're wrong, you learn from that, but you're going to have a much smaller loss, and then you can look for where the premiums are later. For me, I'm looking more at 126.83 as a reasonable place to be short, or look for a pullback. And then you got a short-term liquidity low here. If we get a reaction in a major session and the close above coming in at Chicago, that becomes a really good long, right? In that case, you've got a bit more of an edge here because this is fair value. Again, it's still a slight premium. What we really want is the deep discounts, right? We need this to come in and clear these liquidity lows. We haven't really tested these areas in some time. So my anticipation is that if we can't get down here, we're probably going to have to go higher and then take out the liquidity there. And then this becomes a slightly more of what we would call fair value, right? But the reality of the scenario is the advantage is being able to sell at a premium. So right now as buyers, we don't really have an advantage, so we don't want to do anything. So what have I done here? I've established that the market is not trading anywhere near a premium. It's nowhere near a discount. At the very best, it's fair value. Do I want to pay fair value prices? No, because in the middle, things can go either way, right? These markets, there's no sense in them. There's no order. So you don't want to do that. So that's just basic protection. So now that we know that, we've established that we know what a premium is. We know what a discount is. Now the final step is, and that's the final question we should ask ourselves, is this a major center open? Now guys, I want you to really, really think about this, because in New York, do you know how many centers open in New York? The New York Stock Exchange is going to be kicking off. We're going to have the bond markets get really active in New York because those are countries' debt, right? So that starts to really show some steam. The New York Open kind of acts as a pre-market for these sessions, right? In a way, because again, most traders can access the market before regular trading hours. So again, you're going to start paying a lot more attention at that time, because the American guys are waking up on the East Coast. They have a head start on the guys in Chicago. So they're going to be looking at those pre-market movements, right? So they can decide what they're going to do, RTH. So that's the first thing. So New York is a big session. And what else happens in New York? If you're a Forex trader, then you got possibly non-farm payrolls, inflation figures, all the big figures that tend to create short-term volatility come out in these sessions, right? So that's going to draw a lot of volume into these markets. And then we come into the NASDAQ, right? So 2 p.m., 2:30, right? NASDAQ open, you start to see a lot of movement, right? So 2:30, there's a NASDAQ open. On a Friday, this is even more significant because that's option expiry day. And if anybody who knows anything about stocks would tell you that all the volume in the option markets affects the stock market. Because if people are putting options to buy something, then brokers have to hedge themselves, right? They need to be prepared. So that means there might be an acquisition of cash stock or a distribution of cash stock to match the demand on the option side, which is huge because that's a levered market. So we have this happening on a Friday, right? On a Wednesday, everyone who wants to get active in options, especially for the 2DTs, so 2 days to expiry options, that's where people love to trade, because on a Wednesday you tend to get those big moves. And if you don't believe me, Wednesdays and Tuesdays, check it on any stock chart. Take the big ones, Apple, AMD, all the guys that have a really strong liquid options. See what happens to them on Tuesday or Wednesday, right? Tuesday or Wednesday, take a look at it. Specifically Tuesday, Wednesday, 3 p.m., 4 p.m. UK time. Start to see what happens to those assets, right? And that brings us to the other thing. What else happens, right, in those US liquid sessions? 3 p.m., 4 p.m., 3 p.m. specifically, we start in the UK, 3 p.m. UK time, which I think is about 8 p.m. Chicago Central Time, is 8 a.m. Central Time, is when we get the big commodity exchanges, right? So we get the big commodity exchanges opening, right? So the CME, right? Those guys. And you have the grains coming out of there, and those have massive movements on the FX space because people are exchanging their dollars to get into grains. So we have that, right? So we also have the currency futures, FX futures opening. So that's going to bring in a ton of volume. So believe it or not, guys, we have 3 sessions, and then we have the FTSE close, which is when the London traders are going to hit that button. And that's more later down the afternoon, sort of 4, 5 p.m. UK time. Can you imagine the amount of volume trading these sessions, right? That's a major session for me. Now, no offense, guys, Europe is not really a major session, but you can tell from the volumes. I'll give you a good example. Look at Stay. Let's open this up. Look at the volume trading in Europe. Look what was trading in the US yesterday. It's nearly double, right? This is Europe today. The biggest volume is trading on this candle and with a high, right? So it tells you there are a lot of sellers here. If we were to break above this, then we're going to get more extension, right? Because that's going to cause liquidation, right? But we can see that volume here, 8 a.m. specifically London, and we're seeing a lot of activity here. But it's been relatively flat. Look at the trading that's happening in cable. This is the British pound US dollar. So it should be active in London, but we're seeing less and less of that because most traders are working out that it's better to be trading in the US session. Right, so you can see the liquidity is dead. Right? Well, that's it, guys. Right? You don't believe me again? Let's go to another example. Look at the other day. So we had a big spike up here at 7 a.m. That's London. No one's available for that. Volume was really low afterwards, and then what did we get? Huge move at 1 p.m. New York, and that's where all the volume came, taking this higher. Right, so if you were trying to trade here, think about what your loss scenario would look like. Right? Don't believe me again? Let's go to the next day. Same scenario. Asia, Europe, really flat, even lower volume from this day. Traded here. Right, wasn't a lot, but very similar. And that was at 7 a.m. Market did this, and then all of a sudden, 1 p.m., huge jump. Right? Went all the way till the evening, and then sold off eventually into the next session. So notice that the US session becomes the biggest driver, and that's where your opportunities are going to be. Right? That's how you're going to be able to see that you want to get involved. So I guess I hope that I'm emphasizing here the idea of major sessions. Now look, guys, you don't have to believe me. You can decide to get long. You can buy now and say, when you're buying at a premium, look at how this market's behaving. We're going to sit in this till we get to, it's 11:38 in the morning now, and you're going to be in this till 1 p.m. Right? And then let's say this market goes down. Think about how much money you're going to lose. This is the part where some people hold on to their trades, right? Because it's come off the handle in New York, and they're thinking, oh, shyster, my indicator said it was going up. Or some other theory, or my guru told me that if you buy this pattern now, you're going to get this breakout. And, but then you're in the hole. You want to get out. But you're thinking, shit, that was the rent money. That was the mortgage. Goddamn. That was the college kids' savings, right? It's gone. If I close this trade now, it's gone. I'm going to hold. It's going to bounce back. Goes even lower. Ooh. Now it's really gone. Damn, what am I going to say to the wife? Good boy. Or what am I going to tell my mom and dad? Crap. Yeah, what am I going to tell my girlfriend? Oh, damn, I was trying to get married. Oh, God. You can see where I'm going with this, right? Now you're not getting out of that trade. And then, boom, it's a margin call. Broker sends you a message. Ding, ding, ding. Or you get an automatic stop out. And then you go, that broker stole all my money. And, well, that's what it is. Right, you're done. And now you have a sad story to tell.
It's all gone. All of it's gone. Bye-bye. Woo, see ya.
Right? You go to the guru and said, oh, guru, it was hard. I lost all my money. It was my mistake. I take full responsibility. Guru says, yeah, you're the man. You take responsibility for your losses, and yeah, just keep paying me, and I'll get you where you need to go. This is the reality of today's trading, guys. And that's what I'm telling you. Don't do this stuff, right? Because that's how you get into those positions. I'm literally showing you on the chart. You get long here, market goes down, you're going to be in the hole. You might think it might take the short-term liquidity. It might do it briefly. You think you're going to go hold on, and then it cuts lower. And then we go into a Chicago Open. The futures traders come in. You're scrambling now for the door. It's a margin call. They're buying all your assets cheap, and then they're taking it to the moon. And then you watch this thing run away. It goes past the level that you're in, and you're thinking, God damn, if I only had enough money to hold this. As the good old Bruce Coven always said, if you have unlimited capital, you'll never lose in the markets. You're sitting there, you're having this epiphany, but you've lost all your money. And then you're going to come back in again, because this is a bug. Once you've got bitten, it's not getting out. Yeah, the prison of trading. This is it. So, point in case, guys, I hope you enjoyed the video, but that's the best trading strategy you're going to ever employ. I've just given you it, all of it. Still confused? I have a Discord server. I've got a free mentorship. If you want to talk to me in person, join me in my Discord server. To my next video, guys. Adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses Anaconda.
I'm considering going long on April wheat. What do you think, Valentine?